Hello friends. Firstly, I want to assure you that I am not that dark and melancholic person as some of the stocks covered recently in this channel might suggest. Me concentrating only on uranium, private presence or bad social media giants. But that being said, often where you find controversial and hated stocks, you might also find stocks that are undervalued. You need to go somewhere where other investors don't go. Contrarian investing is what they call it, and oftentimes I feel it is necessary to really succeed in investing. So, as DJ Khaled would say, it's another one. In this episode of Arctic Money, we look at Carriage Services, a funeral home and cemetery operator in the US. I need to give credit now to another YouTube channel, The Patient Investor, who gave me the idea to research the two stocks I've recently talked about here on my channel, Core Civic and now Carriage Services. So go check his channel out, good content there. But now let's begin with the company description by ticket.com, Carriage Services. Carriage Services Inc. provides funeral and cemetery services and merchandise in the United States. It operates through two segments, funeral home operations and cemetery operations. The funeral home operations segment engages in the provision of consultation, funeral home facilities for visitation and memorial services and transportation services, removal and preparation of remains, and sale of caskets and related funeral merchandise. The cemetery operations segment provides intimate rights for grave sites, lawn crypts, mausoleum spaces, and niche related cemetery merchandise, including outer burial containers, memorial markers and floral placements and interments, inurnments and installation of cemetery merchandise service. As of December 31st, 2020, it operated 178 funeral homes in 26 states and 32 cemeteries in 12 states. Carriage Services Inc. was founded in 1991 and is based in Houston, Texas. So what is the investment case with this one? The big picture is very simple. I know 100% sure that all of us will die someday. That's a given fact. I don't think anyone will disagree with me here. I also believe that the burial ceremonies of people in the US where the company operates are not likely to change much in the future. I also believe that kids who graduate from Harvard Business Schools or from MIT do not dream of starting their own funeral home businesses. So threat of new competitors in the future, very low I would say. Funeral home business is also likely to see consolidation in the coming years when family businesses will seek to sell their assets if the continuation of the family business is not what the daughters and sons of original owners want to do. This is where Carriage Services steps in as an acquirer of these family-owned businesses. Finally, I believe more good businesses Carriage Services can acquire, the better the synergies and economies of scale will be among Carriage Services. In a nutshell, this is the investment case, and I feel that Carriage Services can be described as a moat business due to this. And on top of this, if a recession comes, I don't think funeral costs will be the first costs families will start slashing and save on. So recession proof is Carriage Services too, in my opinion. What is not to like with the company? There is always something not to like with every company. No perfect company exists. The business model requires a lot of debt, and big debt never really is a great thing. Debt to equity ratio is huge, 466%, but with most likely controllable interest rate and maturity, and due to steady nature of the business, the company can probably handle it. They have 400 million of their debt due only in 2029, with relatively low 4.25% interest rate. Actually, the debt is pretty much the only thing for me not to like with Carriage Services as an investment, and even that is not a big problem. Let's discuss more in depth then what other things there is to like in Carriage Services. Shares outstanding has been going down in 2021, so buybacks are always good, although they could also use the money to pay down the debt more aggressively. We have seen insiders also selling their stock with the prices above and around $50, but now as the company is trading between $30 and $40, we have started to see insiders buying again, which is always a good sign that the stock might be undervalued. What else? Well, I have not really discussed the theme popular among investment community to invest in companies with great managers. The reason for this is that I, as nobody from here, Arctic Circle country Finland, do not have a fair possibility to evaluate any company's managers, in my opinion. I'm not Charlie Munger or Warren Buffett who can pick up the phone and call any company in the world, any CEO of the world, and have a chat with them. I just don't feel that I can evaluate which company has great managers, which doesn't. Seems like an overwhelming task for me, so I do not concentrate on that too much. I would say it's probably hard enough if I would ask you to evaluate the managers, the top management of your own company where you are working. Would you be able to do it and say for sure that my company where I'm working has excellent top management or not? I don't think you can. It's really a difficult task in my opinion, so that's why I don't want to spend much time on it. More I trust on what Buffett has said, quoting what he has said, that you should invest in a company that is so great that even an idiot could run it, because someday an idiot will run it. So I know that Warren Buffett respects or wants to have a good top management in any company he owns, but at the same time he has also said this one, and I as an investor lean more towards that sentiment. I want to have a company that is so great that even an idiot could run it, because someday one will or could run it. Hope you get what I try to say here. But now let's return. I'm going to make an exception and we return to the management of Carriage Services. Let's make an exception here and talk a little bit about their top management. Firstly, they decided to invest in oil at the bottoms of Corona crisis and made money with it. That is extraordinary in my opinion. I have not seen this myself before, that company operating in totally different industry sees an opportunity somewhere else and deploys money to that one by buying oil stocks. But heck, once you see an opportunity to employ capital and create value for shareholders, rock on baby, I say. Hard not to like that trick play Carriage Services did there and created value for their shareholders. Very interesting. Secondly, I read their most recent earnings call, and I can tell that the biggest owner of the company, the chairman and CEO of the company, Mr. Melvin Payne, seems really like my type of guy. Here's a quote from him now. We think in 5-year to 10-year interval, we believe long-term investment and value creation ideas is what's the right thing to do at the right time. We believe this is the right time, and at the end of these uncertain times that we have seen based on the global environment, we will come out very strong ahead of everybody else within this industry. So the company has absolute long-term focus, don't care about the short-term stock price movement, which is obviously great, what I want to see in any of my top management. Furthermore, the CEO says he and his family own together 12% of the company, and they don't have and don't want to have at the moment at least any other investments. That is skin in the game, and that is dedication. I like that very much. Then, returning to the earnings call itself, the CEO repeats, Melvin Payne, the CEO, repeats more than once how much he is reading literature by Buffett and especially Munger, and how much he is learning from them still and has already learned. And he tells this in such a humble and excited way that a value investor like me, like the channel Arctic Money here, is completely sold. Man just cannot shut about Munger during this earnings call and Buffett, and I loved it and even started laughing when I was reading it. And this, I can tell you, is the first time I have ever laughed when reading an earnings call. I can't remember that happening any other time. So, as said, I don't know how to judge who is a great manager and who is not, but rarely have I seen a CEO so excited about value investing, creating value for shareholders, and talking excitedly about Munger and Buffett. So, for me, very, very difficult not to like him, let's say. So, I give a big plus as a potential investor for this kind of character and mentality that Melvin Payne is trying to get Carriage Services to present and is injecting into the Carriage Services. But now, enough about the company. This way, let's run the company through Arctic Money criteria, ranking, and finally, I present to you my valuation on Carriage Services. Let's go. So here on the screen, you can now see the Arctic Money criteria on Carriage Services. Do I understand the business and the industry? 0 to 5 points. I give 4 points. 4 points to that because funeral home cemetery operator seems quite straightforward business, easy business to understand, at least on the basis of what I have been reading now, what I can imagine. So feeling pretty confident on this one. I give 4 points to that. Does the business have moat? 0 to 5 points. As said, threat of new entrants I predict to be really low. Moat can be widened through economies of scale in consolidation, what is about to happen in this industry. So there is moat, and I will give 3 points to that moat there. Does the management team and the board have skin in the game? I give 4 points out of that. So as said, Melvin Payne and his family owns 12% of the company, and that is definitely skin in the game. I would give a full 5 if other leadership of the company would have a little bit more shares of the company. So not perfect score, but I'm gonna give 4 out of that one. Are insiders buying the stock? Well, as said already, insiders started buying when the price hit somewhere $35 around. They have been starting buying the company. Not big amounts though, but still nevertheless buying. So let's give 3 points. Are super investors buying or holding the stock? Well, this is something I follow obviously on dataroma.com. And nope, there is no super investor buying, so we give 0. Are people who I follow buying or holding the stock? Not at the moment, at least, for me to know. No, I don't know anyone, so that's a 0 point. And finally, discounted cash flow, intrinsic value. Is the stock undervalued? The most important points, maximum 20. I'm gonna give 14, and once we get to the valuation part in the end of this video, you will understand why that is. Well, it's not bad, obviously. Well, valuation obviously relates to the stock price, so I'm gonna talk about that in the valuation section. But before that, let's check the ranking here. Where does Carriage Services land with these points in the Arctic Money ranking, which is, well, I have been explaining that on previous videos, so for those ones who have been watching previous videos, you know how I rank these companies, and this is just a nice little representation at the time when I did the analysis on any stock where it landed on my ranking, so very time bound. If you have seen my prior videos, you know what it is about. But now let's check the ranking, and ranking is right here. We can see that Carriage Services lands at the 6th position. Everything on red I don't own, everything on green are in my portfolio. So as you can see, it beats Core Civic and Intel with points, and it deserves to do so. We are going to talk about the valuation next, so I can already give a secret that I think Carriage Services, with the stock price it is trading today, it can be a good buy already, but it's not a mega deal yet. But once we see the stock price probably going down a little bit more, it might be a deal I want to take too myself. So without further ado, let's return back to the valuation. So at the time of filming this video, the Carriage Services stock is trading somewhere between $35 and $36 per share at the moment. I feel that the fair value when expecting 10% returns annually would be around $45. So yes, I feel the company is undervalued for that 10% already. But as always, with every business, we want to have margin of safety, and with this one, when I take into account margin of safety, I end up with the result that my buy price for the stock would be somewhere under $32 per share. Let's say that if Carriage Services will drop under $32 per share, I might open a position on it and start building one. If the company goes lower, so dollar cost averaging in on that one would be my strategy to play it. But as said, I need to see the stock moving below $32 before I buy it. And as we can see, it is not too far away from that as the stock is trading between $35, $36, $32 being my buy price target to open a small position, and probably dollar cost average down from that. We can see that we are actually not far away, so I can tell you that I will be following this stock very closely, maybe learning much more about it, so I could be more confident with the investment. But as said already, and as you can see in Arctic Money ranking, it lands on pretty good positions. I feel the company could be a good buy already today. So I'm gonna be strict with the valuation still. I need to see it myself under 32, but once that happens, might buy it into my portfolio. Hope you enjoyed the video. Hope I see you in the next video also. Thank you for watching this one. See you in the next video. Bye bye.